As a business entity, if you own a cow and a calf is born to that cow, will you account for it? Even if you decide to account for it, what is the value you will assign to that? Welcome to Let's Learn IFRS series. In this episode, we will understand what is a biological asset and how is it being measured as per IAS 41. A biological asset can either be a living animal or a living plant. Going a step further, such living animal or a living plant can either be a bearer plant or an animal or a non-bearer plant or an animal. Please note, bearer plants are not covered under the purview of IAS 41 and will be treated as per IAS 16. While attempting to understand the measurement of a biological asset, it would be appropriate for us to understand what is a bearer plant or a bearer animal through an example. A tea plant is considered as a non-bearer plant, whereas a mango tree bearing mangoes are considered as a bearer plant. Similarly, you can draw a parallel reference to the bearer animal and non-bearer animal. For instance, a cow that can bear a calf is considered as a bearer animal, whereas an ox is considered as a non-bearer animal. Before getting into the measurement of a biological asset, it is important for us to understand to whom the standard applies. This standard applies to a person who is engaged in an agricultural activity. How will you know whether a person is engaged in an agricultural activity or not? If a person is engaged in managing the biological transformation of an asset for the purpose of selling the biological assets itself or the agricultural produce, then such person is said to be a person who is engaged in an agricultural activity. A calf becoming a cow or a plant becoming a tree, isn't it a natural process? How can someone manage it? Yes, undoubtedly it is a natural process. But here, the term managing refers to stabilizing or enhancing the conditions required for the biological transformation. Now comes the question, how are the biological assets being measured? As far as the initial measurement is concerned, both the living animal and the living plant, other than the bearer plants, are valued at fair value. Consider an example where a calf is being born to a cow on 1st of September. In such an instance, the fair value as on 1st of September will be considered for the purpose of accounting. As far as the subsequent measurement is concerned, the fair value as on the balance sheet date is considered. The difference between the fair value on the initial measurement date and the subsequent measurement date is being taken to the statement of profit and loss. So, in essence, even if a calf born to a cow does not cost you anything, it will have to be accounted in your books at fair value. Hope you gained some valuable insights from this video. See you again in the next video with some exciting content.